I'm Sue Cress, and during the next few minutes, we'll be discussing the lending process and providing you with tips to successfully apply for and obtain a loan. Despite what some may have you believe, banks are willing and eager to lend money to credit-worthy individuals and businesses. It's always a good idea to look for the best rates and terms when looking for a loan to fit your financial needs. With today's economic climate, your previous credit history and credit score matter more than ever before. Before applying for a loan, you should obtain your free annual credit report by visiting creditworthiness.com and check for errors. Also, knowing your credit score will help you prepare for what the lenders have to offer. You can obtain your credit score for a small fee from Equifax. Just go to Equifax.com for more information. Your prior credit history and credit score will be significant factors in your getting a loan, and it will also impact the interest rate and terms of your loan. A higher credit score of 700 or more will usually result in lower interest rates. You may even qualify for a loan with a lower credit score if you have stable employment, a history of making payments on time, and high balances in savings or retirement accounts. Let's go into detail on a few different types of loans so you know what to expect when seeking that type of loan. With a long-term commitment of 15 or 30 years, the opportunity for lenders to provide your mortgage loan and build a long-term relationship with you is highly desired. That being said, strict guidelines on extending credit will likely require you to submit a significant amount of documentation about your assets, income, and expenses. In most cases, you'll need to provide credit, income, assets, and liability information, including your residence and personal identification. Save time and speed up your application by collecting it before you begin the process. Some of the information you will need includes tax returns for the last 2 years, pay stubs or proof of income for the past 30 days, bank statements for the past 30 days, quarterly statements for any other investments you own. Lenders will also determine your ability to repay the loan by calculating your ratio of debt to income. This formula compares the total amount of your monthly expense to your pre-tax or gross monthly household income. The standard debt ratio guideline is 36%, although some lenders have been known to stretch the figure to 45%. The climate has changed considerably recently in regard to the home equity lines of credit. The recent downturn in the housing markets has resulted in falling home prices, which results in most people having less equity in their home. A reminder, equity is determined by the assessed value of your house less the amount you owe on it. Tumbling home prices and tighter equity positions means lenders have tightened their criteria for obtaining a line of credit. In most cities, you will be able to borrow no more than 80% of the appraised value less the amount you owe on the home's mortgage. You will be required to provide the same income and expense information as with a mortgage loan. Your credit score will also play a significant role in being approved for a home equity loan. You will likely need a score of 720 or higher to qualify. The recent trend of low-interest dealer financing specials and a downturn in the auto industry has made car shopping a buyer's market. The most serious challenge many borrowers will face is coming up with a required down payment. Lenders are looking for a down payment of 10 to 20%. If you are unable to provide the desired down payment, you may be turned down for the loan or be given a higher interest rate. Do your homework by narrowing your search to a particular vehicle. An educated car shopper can save hundreds to thousands on the final cost of a vehicle by doing online research and knowing the current rebates and specials being offered in advance. Use the financial calculators at RiverBender.com to estimate your monthly payment before you visit the dealer. If you have good credit, the offer should be arriving in your mailbox. Credit card issuers annually send out 2 billion or more offers each year. Looking to qualify for your first credit card? A good payment history and stable source of income are the key factors. In today's world, where credit cards have become commonplace, a likely question is how can you qualify for the best offers and rates on your credit cards? To qualify for those best credit card offerings, make payments on time even if you are only making the minimum monthly payment. Hold the balances of your existing cards to below 1/3 of their available credit limit. When you go over that ratio, you could see the credit score lower and the issuer may raise your rate. I'm Sue Cress, and it's been my pleasure to share some tips on qualifying for a loan. If you have any additional lending questions or needs, please contact me or the staff at Liberty Bank. Remember, it's your money. Make the most of it.